Chat. Okay, Mr. Jordan.
Hello, sir.
All good? Okay, awesome. Videos on. Hey guys, hope everyone's doing well. Um, Monumental time for the year, going into the end period of 1 second. Turn this volume up on the computer. Yeah, going into the a monumental time arena when it comes down to summer slash into nearing the last quarter. I did mention a few of the small points a few days back on the last webinar. We recorded this one. It's going to get posted afterwards for everybody. And we're just going to go into some insights, mainly on the gold market. And then we can pull up oil as well for now. So today's date, the 30th of August, guys, Friday. So we're going into September. August for me personally, it's been one of those months where I've really grounded myself in and outside of the market arena. I've had a good few months of journaling, so I want to get a lot deeper now, as I'm more or less fixated in my location in Asia. We're building our business concepts, building our trading portfolios. As the last year or so, given a few months past, has been a lot of outside experience of the market, and now it's one of those ones where September up until I would say near my birthday into February, like for instance, last year we had a very volatile market, a lot of liquidity, especially on the gold around Christmas time. And I was having this conversation with one of my friends the other day. The average daily range on the gold market right now, on the gold market is, I would say, at least for 300% as to what it was around 18 months ago. Especially when I was in London, I was doing some back testing, back history events, and yeah, the entirety of the money that's moving into the gold, mainly all digital assets like BTC, this, that, and the other, it's all growing in volume for various reasons. So even though I would say this week it's kind of been a cooling off week for me, for the month, and for the team. Now, what I would like to just explain is some of the chart work that's provided and posted, and some of the video material. Like, for instance, I was looking at the gold spectrum, and the gold spectrum. If I just pull up the daily first, as to how we can jump into some fundamentals afterwards. But going into end of August, we've seen around, new highs, all-time highs have been taken out in the month of August. Now we're in a small consolidation. We are creating some higher lows on the external of the daily concepts. And what we're looking at, if you look at the 3 day, okay, look at the 3 day. So over here, when we blasted through the area, okay, the area of around 2,460s, which we were in consolidation prior, a lot of trap volume was then dispersed into the upside. As you can see now on some of the 3 day elements, that what we can clearly see is throughout this huge influx in buying momentum and taking out one of the all-time highs once more, you can see here where it's a very vivid picture as to there's a lot of money coming out towards the last 14, well, I'll say the second half of August, to keep it simple, and especially in the last 7 days or so of trading on the daily concept. So you can see here, after this push, we've awakened a new beast when it comes down to the touched volume, price wise on gold. And you can see here on these 3 days where we can see wick to the upside and downside. This signals to us that, okay, there's volume being picked up from left to right. So from the lower realms here, going up to the all-time highs, money's now coming out. So a lot of the banks, institutions, there's wars in every aspects of the game when it comes to retail, when it comes to brokerages, when it comes to institutional, when it comes to banking, this, that, and the other, and also a buy consensus of physical gold, and also some of the harsher economics when it comes down to wars, this, that, and the other, which are going on. I don't really put my mind into those negatives too much, but I do pick up some of the political volumes that are going through some friends of mine, and it kind of makes sense. But we're in a period now where if gold does break the high in which was formed, we are going to see, I would say, $2,800 to $3,000 per troy ounce of gold. Now, with that being said, again, let's just focus on what's to come in the month of September onwards. And I think the from some of the past history here and from the last 2 years of monitoring, analyzing, and trading the gold market, this is the biggest influx of money that's coming in. And this big influx, as you can see here, there's a battle going on, 3 days, 3 days, 3 days on the current, on the current time frame. You can clearly see money coming in A to B, out A to B, in, out A to B. So my predicament, which I put forward to a few people technically a few days ago, okay, was that I would not be surprised. Even I would say, again, we'll get to some smaller concepts and time frames in a second. Even if we just utilize the 2 hourly, for instance, you can see the highs here and what the market is doing. We had some news release yesterday, which pumped the price to the downside to 2,523s into lows. Again, within a heartbeat, that's 180 to 200 pips, and then back in the other direction. What we can see here from market maker manipulation, so to speak, is the concept of it's running a lot of the arenas right now from meticulous drops, fast inputs of rises. And for a lot of people, yeah, it's great if we're going to be like long term and we can do our correctly. If you're holding buy positions and it's scaled, or it's, you've taken some off the table for August and you want to hold this on a buy concept, buy the dips on gold is the overall thesis. But what we can see here, and let's just go back to the 3 day for a second, I wouldn't be surprised if we actually push into these lower realms once more. We have the small opposing factor 2,485. We have a dash through 2,470s. Again, we have the higher realm of this volume, and this volume is a daily volume area. Okay, the daily volume area. What I do have on the daily is I pick out all of the highs and lows, because you can see here the megalithic high, then we come back in, and with that price action landscape, so to speak, on the 3 day, this is what it's printing on the daily. So we can also see trap volume from A to B. We see all of the major highs and lows. So look at this one here. This high, it's been tested, pushed through, tested again, and at the moment we've came into the day's trading activity, daily trading activity. And sometimes what I do, guys, is the daily highs and lows is something that I've always been immersed in for a number of years now. It's something that I learned way back. So what I'll normally do is I'll copy and paste some of these daily highs, and I love to keep all of my charts nice and precise, clean as possible. And as you can see, this is one of the daily highs gone through. And on the 2 hour, hourly, the intra-session modalities, we've came through, we've re-established that. So we took out stops, we've enforced buyers to come back in. But on the intraday and intra-week perspective, then it's dropped in the opposite direction. So with that being said, the daily highs and lows, if you really want to just, mix this with some of the fundamental insights, look at where we are in a trading regime when it comes down to monthly, this, that, and the other. Be aware of money coming out of the market, and this is why the volume is thinning slightly, even though it's a huge volume. But this is what we're going to see, and this is what we're going to realize. Look at this. This is 8 a.m. London. This over here is 12 p.m. So London pushed the price up, okay? Then London again, back to the downside. Then the high we had here is another 12. That's on the 2 hour. Let's see if we can just scale this in for a hot second on the hourly. And this is what's been going on. But going back to one of the first topics of conversations is that the gold market is moving in tremendous volume. When, let's say back in the day, a good few years ago, gold might do an average daily range of, I don't know, 110s to 160s. Now it's around 300, 400. So even though we have our prolific upside, methodology when it comes down to reading the fundamentals, reading the macroeconomics, reading the politics, reading that we are going into a different dimension, so to speak, when it comes down to the big shift in consciousness. And also we're going into a golden age. It's going to be a very, very, very prolific and volatile next 6 years up until 2030. We don't always have to be in a predicament of just holding in one direction, because we know it's a guarantee gold's going to go up in price. However, what I'm saying here is that we can actually use some of the technical standpoints to give us a further volume analysis, very, very simple things. And again, it's very, very, it's a lot more comfortable in rearranging a weight to go into a trade rather than rushing, because if you're cycling, the 3 day, the daily, the overall consensus, and then bringing that into intra-session technicals, this, that, and the other, we know that the moves, this goes to gains and also a reiteration of risk. And we know that the gold market is going to flush itself to the downside or upside in the spectrum of around 100 to 150 to 200 pips. Now, a lot of people in the industry, in the game, struggle with even captivating and, staying on a profitable win week on a weekly perspective. And there's obviously a million reasons as to why. But what I'm saying here is that some of the gold methodologies are now giving you more of an example to earn 200, 300, 400, maybe even 500 pips per week by being a little patient and not getting too caught up on the major fundamental insights. Because obviously it comes down to capital management, your psychological development, what your plans are in and out of the market field, this, that, and the other. But if we just learn to put the majority of our eggs, I'm not just saying gold, whichever, currency, even if you trade BTC, whatever it may be, by now just trying to accumulate all of that market thesis, your psychological tendencies, you're writing down what your goals are for every single week, every single month, every single fortnight. And what you can do by just narrowing your mentality into one or two instruments, you're going to take a lot of the noise out, and you're going to be in a predicament where you can actually start to keep more of your gains rather than make mistakes by, let's say, okay, you trade nicely on gold from Monday to Tuesday, then you go over to GBP JPY, and that absolutely rocks your entire system. You start losing, you might take excessive risk. These are all just basic pointers. I try to refrain from talking about basic pointers, which you could easily read online, but there's nothing other than experience in which, if you're smart and you actually write down, you do your chart journals, you do your fundamental journals, and you also do your psychological journals in and out of the market, you can refrain from a lot of these mistakes and mishaps. If you make 200, 300 pips on a nice gold collapse or, a push to the upside, then, as I was mentioning on the last webinar the other day, and I've been talking to a lot of people about this, it comes down to, when are you going to be happy with taking some of the profit from the table? Let's say 30 to 33% of an overall potential, whether it be $3,000 or maybe 300 pips up, take 30% off, put it in the bank account, then allow the rest to compound in your account, whichever, area of discipline and dialect you're actually in. You can make small opposing factors and small changes that are going to unleash more profitability overall on the landscape. And again, if you can master gold and you can get familiarized with the gold routine, you can get familiarized with, okay, London's been doing the bits for the last few days, making the highs and making the lows. London might control for the next 2 days of market manipulation. It might spike back through to London. Okay, then Chicago may tip in, and then the pattern may change. So this is why I feel one of the smallest concepts that you can have portray additional value onto the table is by the topic of the daily highs and lows, because you can see here this daily came through, spiked below, completely switched around, spiked through the previous day, came back up, and then what's happened again? You see that on the daily close. You go, okay, manipulated volume, and there's more value now. If you do your analysis, let's say on the daily, you're steering away from fundamentals or a high impact news release, then what you can come down on a smaller time frame, copy and paste that, and it might look more suited on an hourly, a 2 hour time frame or an hourly time frame to then be in the topic of going on the opposite direction. If you got your daily close above here, then you go, hey guys, guess what? I can read this. This is manipulation. We're in a sideways market. We're taking money out of institutions, banks, and different arenas. There's a lot of back and forth in global politics. This can start to consolidate until we run into September, maybe around the 4th or the 5th. Maybe next Wednesday it'll start to, give us more cost of focus and more analytical volume, where we can then start to, swing some trades, scale in this, that, and the other. But we're in a time right now where, as you see from here, we've gone from a daily low into a daily high, and then we've come off again. When we push back through, this is 5 a.m., so pre-Asia's pushed back through, and by the decimal, as you can see there, it's once more top the exterior. And given a fact here, you can see that, okay, maybe yesterday's closure, you've seen this, and say, okay, it might play in between the region, might play in between the realm. We've got some fib here. We've also got some trap volume around here. So if gold does manage to just sustain this high, so to speak, guess what? You just wait. You put the daily on the table. You wait for the closure. You see what which time zones or which sessions, or is it Asia, is it Chicago, is it London creating the highs and lows? And you say to yourself, okay, London might configure this, and then it might push it into the, you know, reach some of the London lows that were made yesterday as a manipulation point. And then from there on, if gold does start to melt, okay, you've got another daily low here. You've got a massive one over here. But even going back and just looking at this now as I'm focused on this webinar, this one, okay, it could just be a new altercation back down here. And then you've got confluence because you've got the volume, the trap volume here, you've got the 50 area, you've got the higher area in which the markets have already retested multiple times. But if gold does start to fall back, because again, you have to understand there's a lot of buyers, and at the end of the month, you're going to see a lot of this. And this is a very special time in the year, in year's events, which happens every summer. The summer trade in theology is something that, okay, we've seen spike to the high, spike to the high, spike to the high. We haven't actually came up and even spiked back through here yet. We've stayed below. So if gold does start to roll back over, we could see another candle such as this one come into the downside. Yeah, it could spike through here, it could spike through here, it could close here, or you could see a spike go all the way back up and the body closes here. That would be a massive intentional purpose for you to write this down and say, okay, now we've spiked out multiple lows of manipulation, and then you can see which session is doing what from the lows on the smaller time frame. And now it's picked up more volume from here, ready to make another rumble to the upside. So all I'm trying to suggest is keeping all of your charts nice and organized. So that's the daily there. And what I'll do again, this is the 4 hour. So the daily and 4 hour and one template, so to speak. And then on the lower half, I would keep it nice and crisp over here where I have the 2 hour, and then I'll have the hourly on the left-hand side. Let me check the chat box. Everyone all right? So that's it. So what do I expect for today from the end of August? I feel that it'd be very, very, I wouldn't say special, but I don't really see gold pushing through yet. If it does, it will stabilize the highs. I don't think as today we will push and then we will close back below. I think it'll be ready just then to start to bolt. And then from next week onwards, we might see a little pullback, and then the market will go at least 400 to 500 points. With that being said, once more, for the downside potential, we've got 2 p.m. over there. So that was pre-Chicago switchover. All right. If I go to the day, and we could just copy and paste where this volume is over here, and then see where other lows and highs have been formed. So we've got the daily low over here. So if gold, again, let's look at this concept of the highs have been hit through on session, switchovers, manipulation. Over here on the 4 hour as well, we have a thinner area of volume, which was preceded. And over here, okay, where this daily high has been copied and pasted over, we've got a push through, back down, push through, back down. And right now is 12 minutes, 11 seconds on that push. Can we start to stabilize, okay, to the short side and maybe push back into this arena here? So again, this is a copy and paste from the higher perspective. There's going to be money around this area. There's going to be liquidity around this area. So what we might do is we could end up shocking many of the retail, and we can push down, okay, come into here, create a higher low past this previous. Okay, worst case scenario, I feel like we could maybe push in here, but I'll be very, very surprised. And then we can push back to the upside. So I wouldn't go all in now if you haven't been holding positions from the past of August and you haven't got positions already covered to the upside. I would be very, very skeptical of just re-entering for a long right now when we have multiple areas that are barriers right now. Okay, there's multiple barriers. There's more barriers that are telling us be very, very cautious and effective when it comes down to placing in buy trades from this predicament. If this webinar, and we're looking at the market right now in the same price area, we were doing all of this work now on a Monday or Tuesday at the start of September, then it'll be a little bit of a different story. Because at the end of August, okay, we've been pushing up massively for the most amount of the month. We can see some unresolved clarity here, and at the same time, as I say, I would personally just wait out of the market if you're super, super strong on entering a fresh buy trade right now, a fresh executed buy trade, unless you already have, profit running from the past, you've held it well, and a lot of those positions are secured, or you took some money off the table, you put some in your bank, you've kept some for You've kept some money on the table to compound, whatever it may be. You have to look at all of these variables. It's not just a one-sided seed of the game where it's either daily, hourly. There's much more than reading the market go into a particular direction outside of the arena when it comes down to position management, which goes into psychological management, which goes into how much are you happy with? What makes you happy to then close the laptop after a session, after a success or a loss, and then get fresh for the next morning, this, that, and the other, and have that patience. So you're not going in from, as mentioned, let's just try to trade gold today. You win on gold, you get pumped up. You haven't took anything out of the market. You haven't even, spent some time to write things down, handwriting on a journal, and knowing what your own goals are for the day, for the week, and especially for the month, and knowing where we are in the space of time right now. When it comes down to the psychology of many traders getting excited on these easy gold buys, and also at the same time the fundamental elements of it, which is a whole different network which you have to put together. And sometimes for me, it's just better off not getting involved in some of the medium to high impact news. Just let it go out. If the moves, if you say, okay, I'm looking at this news, I've got my potential is for gold, the market's going to go 200 and 300 pips. You're not in the market. It did go in that direction. Great. That's a psychological winner. You give it some time, depending on what session we're in, where we are on the week or month, and then we go from there. So, and also with that, I've been looking at oil a lot recently. And oil, I've done a lot of research, and I've done a lot of price action research technically, and also some fundamental sides of the fence. Again, with oil, same thing. You got the daily on here, and you got the 4 hour. And I've just been going in and out of the oil market technically, okay, on an analytical standpoint to just remap, okay, because it was quite a while since I started to look at oil, but it moves nicely like gold. You can use the same formats, you can use the same, periods of time on oil, okay, as you can with the gold market, as you can with the gold market. So as I say here, the daily, the highs, lows. I haven't really remapped this week, but there's same similarities that you can literally use technically on oil as you can do on the gold market as well, and especially BTC. But we always advise not to trade BTC with high pip spreads, slippage, this and the other on retail brokerages. But you can use it as framework for tech understanding, and because that moves very, very fast as well as XAU and also oil, you could just use it as technical feedback, back and forth, and build up a journal and improve your strike rate, improve your confidence, so on and so forth. So for me, we'll jump on again next week. I just wanted to say hello to everybody and also get this one recorded and set up in the next hour. Last time I had to go from a Microsoft, and WebEx was a little bit strange on the Microsoft. It crashed, and I didn't get the upload. And now I'm on the Mac, so this is getting recorded right now for people. And yeah, just get ready for September. I'm using this weekend to just sit back, have some good food. Look at again. I don't look at the market too much when it comes down to how many hours a day am I fixated to the chart. Now, with that being said, you need to give yourself time. You need to give yourself time, keep everything clear and clean. Everything on this gold market, on this gold daily for me, these lines, this, that, and the other, it's been on for a good week or so. So I haven't had to come on every single day and remap this, that, and the other on any of these time frames. I'm just getting, again, a lot of it's from experience based, timing based. Okay, and then I'll just copy and paste it onto the 4, and I'll keep the lower bridge work over here set up. I'll keep it set up for the intra sessions where I can see which session or which 2 sessions, this, that, and the other, are actually doing the articulation of the movement. So as you can see here, this looks a nice potential, and it's one of those where depending on your success for the week or month, it might not even be worthy of even jumping in if you've had a good few weeks, or August is shining for you. Yeah, so it's going to be completely up to you. And I would always suggest that if you've made X amount of pips, then I'll bring the volume down once you're happy to go into these arenas, because it can bolt to the upside. If it does close, then it's going to be a wonderful September, or it can push down to take out all of these lows, take out a lot of retail stops and predicaments around this area, dip in, and then start to dip back out. So remember, a big a big notification in the market is the market maker concepts, and this is how the sessions work with each other. And the Asians might control the market for a few sessions or days in the cycle of a week, coming in from the previous week and then maybe changing over. It's something that you can see with experience. And once you start to reaffirm it on the chart, this, that, and the other, keeping clarity and keeping peace of mind and staying calm, it's gonna upgrade you completely by using and utilizing all of these concepts. And especially when some impact news comes out medium or high, you can see maybe beforehand you actually spotted what the data may be preceded as, and then the data and stuff is used to push the market into one element to pick up liquidity or volume, this, that, and the other, and then fire against the majority who've already been stopped out, this, that, and the other. And again, just take your time with gold, because one of these candles here, look at this candle, 94s into 18s, it's over 200 pips, guys, in 2 hours. So it can leave you very, very well stimulated if you make a trade and make money by accident, but it can also break your heart if you're not patient, this, that, and the other. So that's my gold thesis. Anything else I'd like to just say is, just to finish off that last topic of conversation about journaling, get yourself notepads, print off gold, master what, even if it's not gold for you, just keep mastering where you've been the best at. And you can't really figure out where you've been the best at if you do not have a journaling where you screenshot your market data, looking at how much you're making, what you're happy with, and you're not trading off pure dopamine fixes, that and the other, and you put in a lot of other elements at bay when it comes down to outside of the market in your personal life, this, that, and the other. So let's see. I'm gonna be on and off the computer for a few more hours, watching a few things online, taking some notes. I'm just going to see what gold does. I'm not going to be embracing myself in any buys or sells right now. So we've recorded this webinar, guys. I'm going to see. I want to do 2 or 3 a week. I really just dial in on gold and oil. Any questions? You can shoot us, any of us, a message on the Discord, and then we can go from there. So just keeping it simple now, and I hope everyone has a good weekend. And let's look at September onwards. A solid 4 months up until Christmas, guys. So let's make it count. Okay, awesome. Lots of love, people. I'll see you on the inside. Thank you, mate.